Well, hello again, everyone. Welcome to a special Sunday edition podcast. Actually recording this very late in the day, Wednesday. I got word a few hours ago. I had an opportunity to visit with my buddy Keith Neumeyer, and I had to take him up on it. Keith, of course, founder and CEO of First Majestic Silver, one of the largest primary silver miners that you're going to find. He's also founder and chairman of First Mining Finance, and obviously an expert in all things silver. And on this Fed Day, what a great chance to talk to Keith. So Keith, hey, thank you for taking a few minutes.
Well, thanks, Craig. Appreciate it.
I tell you what, I'm dying to get your thoughts on what transpired kind of in the macro sense today. You know, we had all this jawboning from the Fed governors over the last month, talking about how rates were going to, there was even one, Keith, that said they were going to hike rates 6 times in the next 18 months. And now they're talking maybe not even again this year. Gold and silver have responded. What do you make of this kind of macro stuff at this point?
Just a big absolute joke is really what how I look at it. I just don't, quite honestly, if I was part of government, I would tell these Fed governors to shut their mouths, and I actually make it part of their job description that they aren't even allowed to discuss anything openly to anyone publicly. The fact that these guys, they all want to become movie stars, basically. They just can't get out of their way, to tell a story, and every one of these governors tells a different story, whatever they feel like saying at the time, and none of the stuff that comes out of their mouth is reality. They're quite honestly, they're just a bunch of academics. They're not part of the real world. They've never had a real job in their life, and they just they think that what they're doing is actually helpful for humanity or for the U.S. people or whatever, and really what they're doing is just hurting everyone, and they're not letting the markets actually be markets, and I just I've at this stage in my career, I've and being in this business for so long, I've just never seen the government and the banks, the federal banks, the central banks, so involved in the markets as they are today. And it's just these politicians, these bureaucrats, for whatever reason, think that they actually have the authority to manipulate the markets on the behalf of the people for the betterment of the people. Yet what they're doing is actually hurting the people. And it's just amazing. I think the entire system has to be dismantled, and we got to start over again.
Yeah, I'm with you on that one. How they have any remaining credibility at this point? I guess they're only given credibility by the sycophant media that wants to make it sound like they're all-knowing and omnipotent. But, boy, I tell you, they're leading to negative interest rates around the world. And, of course, one of the key arguments people have always made against holding physical gold and physical silver is it doesn't pay a dividend. Well, that beats the heck out of a negative dividend, doesn't it?
Wow. Can you imagine negative rates in North America? I could just oh my God, there'll be riots on the streets if that happens. And the long bond is hitting new lows as we speak. And it's we're getting very close to Armageddon here. It's just it's going to be absolute nuts. And you just have to be in precious metals. There's really no alternatives. Gold, silver. You got to be all in, as I am. I've said that many times, that I'm all in when it comes to First Majestic and First Mining Finance. It's just the only place to be as far as I'm concerned.
Yeah, well, there definitely are reports now of big buyers, not only of silver but of gold. People realizing that this is the best way to store wealth, especially in this environment. And I report every day on silver demand that we're seeing, but I mean, you're right where the rubber meets the road, Keith. How does it, we're halfway through 2016. How is this comparing to what you saw in 14 and 15 in terms of just aggregate demand and just the flow of metal that you're seeing around the world?
Well, it's night and day. It's but actually, there's two questions there. One is the actual flow of metal, which is you're alluding upon the physical, and the physical demand has always been there, but and it's been there fairly substantially, as we know, from Russia, from China, and from elsewhere, and retail and sophisticated investors. They've been buying up physical, for the last couple of years, but it hasn't shown up on price because of the manipulation that the central banks and the governments have been doing to keep the price down. But there's a limit to that, and the physical demand continues, and I think is a very exciting component of what's happening. But what the change is that the demand is actually starting to show up in the paper markets. And that's different because, the physical demand, for it to start to show up in the paper markets, tells me anyways, that there's some stresses going on where, the physical just isn't there, and there's no choice or no alternative other than it to start to affect the paper price. And then finally we're starting to see that occur. And I think that's a very important change, and a very interesting thing as far as I'm concerned is the cyclicality. As you probably have seen, or Craig, that June is generally the low part of the year when it comes to the gold and silver prices. And on my Twitter account, you can actually see I've got a 30-year chart on silver on Keith_Newmeyer, my Twitter account. And that 30-year chart is very clear that June is the low for the metals. And if you go back to 2014, 2015, it was devastating. It was almost like come May, we had the gold and silver prices fell off a cliff into June. And I actually used that as an opportunity to buy metal in a couple of different stocks at the time, and I did okay trading that low. But this year, we didn't see that cliff. We've actually seen strength into June, which is extremely unusual, and that tells me that this is a different market.
Yeah, definitely, and it feels different. That's for sure. We've had that silver supply deficit now for a couple of years in a row, and it sure seems like it's all coming to the fore, doesn't it?
Oh, absolutely. It is really. It's very exciting to see, and it's nice to see our shareholders starting to make some money again, and it's talking to investors now. It's a lot easier. The last 5 years has been very, very difficult for the mining sector, and for First Majestic Silver. Obviously, it's been a tough few years, and I used that opportunity, that low in the marketplace to put together my new company, First Mining Finance, and I think it was just perfectly timed. We bought 8 companies in a matter of 14 months and accumulated, close to, 15 million ounces of gold over a 14-month period. I don't think anyone's ever done that in the history of mining. So, we're pretty excited about what we've created at, First Mining Finance.
Absolutely. And just so everyone knows, I've been a benefactor of that one and First Majestic Silver. Bought some First Mining Finance back, 25 or 30 cents. It's been banging around 60 or 65 cents now for over a month. You said you've acquired all these companies. It's a wonderful story, and obviously your expertise and the expertise of the guys that are on the board with you, and your exploration expertise and the geologists you've hired and all that kind of stuff. It obviously is going to pay dividends. Is there a point, though, that we've got to get the metals to a certain price point to where a lot of that comes online, or how does that end of the business model work, Keith?
No, in just talking specifically about First Mining Finance for a sec, these are what I call early cycle assets that we've been buying. This is not a model, I'm not sure if your listeners, know, like, for example, how Silver Standard was built, when Bob Quartermain, back in the 80s and 90s, put together a very, very large portfolio of silver projects that were all very, very low grade and needed much, much higher silver prices to ever be economic. And even today, at current metal prices, some of those assets are still not economic. And,
Mm-hmm.
and even at $30, $40 silver, a few years back, those assets were still not economic. But he built quite an interesting company. The stock did very well, and so on. But no, that's not what we're doing. What we're doing, we're buying gold assets primarily with a focus on Canada that have high grade, that would be economic in today's metal price environment. But they weren't financed during the last cycle because of whatever reason. They're poor management, bad timing, just a variety of different reasons that they never got the funding required to get those into production during the last cycle. And so I call these early cycles. So when the money starts to become available for the mining sector again, which is slowly now occurring, that these assets will be financed very early on. We don't have to wait for $2,000 gold or higher to expect these assets to become into production. I think that's key when you're developing a portfolio, because if you look at First Majestic Silver, for example, we were shown dozens of projects, by companies, the banks, during the heydays, 2010, 2011, and so on, when silver was $30, $40, $50 an ounce, and these, at those numbers, they were marginal, they were okay looking assets, but they had 100 million ounces of silver in the ground at, let's say, 30 grams a ton, but they needed $35 silver to be economic. We avoided buying any of those assets. And because buying those types of assets will bankrupt you in times of low metal prices, and they only work in times of high metal prices. So when you're buying assets, you have to be very careful to buy high-grade, good quality assets that can sustain long-term, metal prices over decades and decades and decades. That because the metal price is cyclical; it goes up and down. And you have to have good quality assets that can sustain themselves during both types of environments.
Well, you certainly have done that so far. Are you still looking to acquire even more for First Mining Finance?
We are, but when I put the company together, it took me a couple of years to get it public. And I think if there's anything I've proven in my career, I'm a very good buyer, and I'm a very patient buyer. Going back to the 90s when I put First Quantum Minerals together, a big copper company, and then in the early 2000s, putting First Majestic Silver together, it's an interesting stat that, out of the 6 mines that First Majestic currently is operating, and First Majestic is the second largest silver producer in Mexico, 4 of those mines were purchased between January of 2004 and July of 2006. So over an 18-month period, 4 of the 6 mines were purchased for less than $20 million. So, I picked those up for, almost next to nothing, and built obviously a very substantial company as a result. And it all comes down to what you pay for the assets. And when I've started putting together First Mining and Finance's portfolio, I hit the ground hard. We had a target list, and we bought quite a lot of the companies that were actually on our target list, which was pretty exciting. I think we were even more successful than I thought we were going to be when I started. Buying eight companies in 14 months is quite a thing, right? The lawyers and the accountants love me, believe me. But anyways, we were very successful in what we did, and we still got assets on our target list, but things have got a little bit more expensive than they were before, and we've got a pretty exciting portfolio, so we're going to kind of take it easy a little bit. We're not going to be chasing this market. We're going to continue to look for value, but we're going to be opportunistic. We'll wait for the right opportunity before we do anything else. Just
what I want to hear from my CEO, that's for sure. I just keep adding to my position, 1,000, 2,000 shares at a time, and it's working great. But while I've got you on the phone, and before we wrap up, though, I've got to ask you about First Majestic, because I think I told you before, I lucked out at the end of last year. Timing just couldn't have been better. I had an old employer of mine buy me out of a defined benefit plan. I thought, I'm going to buy some miners here. It looks like they're pretty stable at this point. And so I started buying First Majestic like at 3, Keith.
Wow.
And now here we are today on Wednesday. You just had a new 2016 high close at $12.90. There's a lot of folks out there, and I'm sure are thinking, I missed the boat. I got to wait for a pullback. But I read somewhere that you've got, at least for now, your all-in sustaining cost down under $9 an ounce. Is that right?
It is, actually, and that's after a couple of years of hard work. It was not easy to get the cost down to those kinds of levels.
Yeah,
I'm not suggesting they're going to stay there. I do expect that they're going to go a little bit higher because we are. Now that the metal prices have improved, our cash flows have improved. The company's nicely profitable at current metal prices. The treasury's growing every week now, which is great to see, and so that's going to allow us to make some additional investments in our assets. So as we increase exploration and development and then doing other things, those all-in costs will slowly start to increase over time. But it's something we're very proud of, and it's a big achievement on our part and our management team's part to bring our costs down to the levels that they're currently at. And just a quick comment before we go on the share price. It's it has done very well. The First Majestic is actually the top performer in the index in Canada. Out of all industries, which is interesting, year to date. So it's been a very nice performing stock for our investors and our shareholders, and it's great to see. But I still think there's considerably upside. If you go, at current metal price, at current share price, our market cap is somewhere around $2 billion. And, if you go back to 2011, our market cap was $3 billion. And we only produced 7 million ounces of silver that year. This year we'll do close to 20 million ounces of silver, so almost 3 times the size from a silver production basis. So I think there's quite a lot of room to go. If we continually see the silver price move and the gold price, of course, move, as I think I'm pretty confident we will over the following part of this year and into next year. We're going to see, I think, in my view, anyways. First Majestic continually performed very well, and of course First Mining Finance as well performed quite nicely.
And Keith, you told me the last time we spoke that almost 90% of every $1 rise in the cost of silver and the price of silver flows right through to your bottom line. Is that still the case? I thought that was remarkable.
Oh, the leverage is crazy, actually. There's quite an interesting PowerPoint presentation on our website, which your listeners should probably go to and then look at, because there's a lot of quite interesting stats in this PowerPoint, and one of them is, of course, the leverage to the price of silver. It's the cash flow that we generate as the silver price goes up is pretty dynamic. And you're right, at our size, for about every dollar move in the silver price, about $18 million drops to the bottom line. So that's huge leverage to the price of silver.
Wow, that's just tremendous. Well, my friend, keep up the great work. You've made me a lot of money so far in 2016. We always speak very highly of you at the Ferguson House. I can tell you that.
Yeah, well, that's great. And I think that over time, I think the First Majestic Silver story is quite well known, and hence the performance that we've seen, over the last, 6 months, New York listed company, and so on and so forth. But, I think, First Mining, it's a pretty new company. It's only been around for a year, and the story is pretty new. And I think that as people start to learn more about the story and understand what we've actually accomplished as a company, I think that it's going to perform quite nicely over the next year and going forward.
No doubt about it. FFMGF here in the U.S. What's that symbol up in Toronto, Keith?
The symbol is FF for First Mining Finance, and FR for First Majestic Silver. We've got a great symbol in New York, it, of course, but AG in New York for First Majestic. We're obviously very lucky to have that symbol.
Absolutely. I really encourage everybody to check them out. Train has not left the station by any stretch of the imagination, and if you think higher metal prices are ahead, Great companies run by smart people are the place you want to be, and Keith Neumeier is definitely one of the leaders in the industry, one of the smartest guys I know. Keith, thank you so much for spending some time on this really busy day.
Well, thanks again, Craig. It's always a pleasure talking to you.
All right, my friend. I hope we can do it again soon.